Welcome to the Bull vs. the Bear. This is the show where we break down the optimistic case and the pessimistic case for major stocks so you can decide for yourself.
All right, today's contender is an absolute giant. We're putting a true titan of the financial world under the microscope, JPMorgan Chase. And yeah, you've definitely heard the name, but trust me, the story for investors right now, it's anything but simple.
So here's how we're going to break it down. First, we'll get a sense of just how massive this company is. Then we'll dig into the bull case, all the reasons to be optimistic. After that, we'll flip the coin and look at the bear case, the risks. And finally, it's over to you for the verdict.
Okay, let's get right into it. Section 1, a financial fortress. Before we can even start debating the bull and bear arguments, we have to wrap our heads around the sheer dominance of JP Morgan. We are talking about a company that is seriously in a league of its own.
And look, that's not just my opinion. The pros at Morningstar are pretty blunt about it. They call JP Morgan arguably the dominant bank in the United States. They've got leading positions in pretty much every financial service you can possibly imagine.
And if you want a number that'll make your head spin, here it is. $4 trillion. That's how much they have in total assets. To put that into perspective, that's larger than the entire economy of a country like Germany. So yeah, when we say financial fortress, we really mean it.
So, with that incredible scale in mind, let's start building the bull case. Let's dig into why so many investors are so optimistic about JPM's future and why they think this fortress is absolutely built to last.
So the bull argument really boils down to a few key things. First, that unmatched dominance we just talked about. Second, it's what some call a sleep well at night stock, because its balance sheet is just so strong. Third, they're not just sitting still. They are pouring money into expansion to lock in future growth. And to top it all off, the management team has a stellar reputation for making smart moves with their capital.
And this isn't just a gut feeling, right? Professional analysts are backing this up. Argus Research, for example, has a strong buy rating on the stock, and they've set a target price of $340. And check out that rating for financial strength high. That's exactly what you want to see.
And here's the proof in the pudding, folks. This optimism is fueled by real results. Just look at this jump in earnings per share. It went from $4.40 up to over $5 in just 1 year, totally smashing what the experts predicted. This isn't just theory, this is actual performance.
Now, how does companies stay on top for so long? Well, analysts have a term for it, an economic moat. Think of it like a castle. It's a deep, wide ditch that gives a company a long-term advantage and makes it incredibly hard for competitors to even try to attack. And guess what? JPM has the best rating you can get, a wide economic moat. This comes from two main things. First, their huge size gives them cost advantages nobody can match. And second, something called high switching costs. I mean, once you have your checking account, your credit card, and your mortgage with them, it's just a huge pain to leave. They've built this incredibly sticky ecosystem.
Okay, but it can't all be good news, right? Now it's time to flip the coin and look at the bear case. Because even the strongest fortress can have weaknesses, and there are some serious storm clouds gathering on the horizon for JPM.
A major risk right now centers on political and regulatory heat. There's this whole controversy around debanking, specifically allegations that JP Morgan closed the accounts of Trump media. And as you can see from his timeline, it's now escalated to a formal investigation in Florida.
And the language in the official letter to CEO Jamie Dimon is, well, it's severe. The Florida Attorney General is talking about potential breaches of criminal and civil laws. This is way more than just a political headache. It's a significant legal and reputational risk, and the outcome is totally up in the air.
But the risks aren't just political. Let's talk about something more fundamental, the price of the stock itself. Because here's the thing, even a great company can be a terrible investment if you overpay for it. And this is where the bear case gets really compelling. Morningstar's analysis is pretty stark. While the stock is trading above $300, they think its actual intrinsic value is closer to $250. If they're right, that suggests the stock is overvalued by about 20%. That's a big gap. So the bear case really boils down to this. You've got these big picture economic risks. What happens if rates fall or the economy slows down? You've got uncertainty about whether their big investments in growth will actually pay off. You've got that potentially overstretched valuation. And finally, you've got this brewing political storm with a completely unpredictable outcome.
So let's bring it all together.
This is the core conflict every investor has to weigh right now. You've got this powerful, established fortress on one side, and these very real and growing threats on the other.
So on one hand, you have this best-in-class financial powerhouse with a proven track record, the bull case. But on the other hand, you have a stock that looks expensive and is walking right into a political and regulatory minefield, the bear case.
So, what do you think? Does the bull case, with its fundamental strength and wide moat, win out? Or do the bear risks, the high valuation and the mounting controversy, seem like too much to handle? Is JPM a fortress of value or a giant facing a fall?
This is where you come in. We read every single comment, so drop your verdict below. Are you a bull or a bear on JPM? And what's the single biggest reason for your decision?
If you enjoyed this breakdown and you want to get smarter about the biggest stocks on the market, make sure to subscribe to the channel. That way, you won't miss our next explainer.
And you can watch another one of our analyses by clicking the video right there on your screen. Thanks so much for watching.